Namaskar. This is Akhilesh Bhargava. Welcome to tit-bits on business and finance with me. As China initiates a radical shift in its political agenda and government policy, there could again be a big opportunity for India, provided that we quickly get our act together. So far, China has pursued its own version, its own brand of capitalism, which permitted the rise of fat billionaires like Jack Ma of the Ant Group and Pony Ma of Tencent Holdings. But with it came huge income inequality, huge disparities in income in China, which threaten political stability in the repressed nation today. Income inequality is big in China and it is growing and it has become a political problem. Its top 10% families own 47.5% of the country's wealth, and the richest 20% Chinese earn 10 times more than the earnings of the poorest 20% Chinese. China has therefore now decided that it will pursue moderate wealth for all rather than wealth for just a few, and so its government has offered a policy outline for common prosperity, which includes fresh income regulation and income distribution to target what it calls excessive incomes. What is excessive incomes is certainly not defined. Capitalism is therefore out and socialism is back in China. Thus, as the Communist Party's Congress needs to decide and give yet another term to its ruling autocrat Xi Jinping, announcements have already been made by the Communist Party of China, the CPC, that China is a socialist nation and not a capitalist one. It means that further regulation and curbs and crackdown on corporates is likely. Socialism has been given priority before shareholders, and socialist fairness is being preferred to those very efficiencies of capitalism which have made China into a global manufacturing powerhouse at present. At a recent meeting of its Communist Party, the government thus laid out new strategies to target the upper echelons of China and has vowed to strengthen the regulation and distribution of high incomes to reasonably adjust to what it calls excessive income and encourage high income groups and enterprises to give back to society in China. That's a tall order, and that's also a big political agenda. China now says that it will expand the size of its middle income group, it will grow the earnings of the low income group, and it will prohibit illicit income in China in order to promote what it calls social fairness and justice in China. It says that an environment will be created where more people become wealthy. The government therefore says that efforts will be made to strike a balance between ensuring a stable economy and ensuring growth, and to prevent any kind of financial risk that may come because of its own version of capitalism that it is now trying to shun. The CPC's priority is to end poverty and build a moderately prosperous society as being central to promoting well-being in China and strengthening its overall governance. That's the kind of political shift that we are seeing in China, which is going to threaten capitalism in a big way. This statement of the CPC may be populist, but it is ominous for capitalism and open and free business in China. It is very heavy in content, but it is cryptic about what is excessive income, what is illicit income, how will it distribute this kind of excessive income, how will it curb illicit income, how will it grow the income of the low income groups in China, and what is the environment that it seeks to create in the country to make more people healthy. All these parameters are not clear, but the political statement and announcement has been made. China has gone back to its key feature of socialism, which is common prosperity, as it strives to address huge inequality and growing unrest in the country. This announcement of the Chinese government follows months of intense pressure on private companies to reform their activities, followed by China's swift crackdown on companies like Ant, Tencent Holdings, Didi, and Tal Education in sectors like internet, private education, and real estate. The crackdowns have been heavy, and those entrepreneurs have suffered immensely along with their investors. It has suddenly initiated radical changes, including the ban on private tutoring firms from making profits, from teaching core school subjects, and from raising capital, resulting in billions of dollars of losses to investors. That sector has seen major investments from foreign firms, and that investment is threatened today. It has come down heavily on companies like Didi and Ant Group for perceived infractions, which include data abuse and anti-competitive practices as per Chinese standards, eroding investor wealth of tens of billions of dollars. This crackdown on corporates in China has certainly been a huge setback to free market practices and build-up of wealth in China. As the statement goes, these practices are going to only continue further. The practices that we are talking about are practices to curb capitalism. The impact of such moves have left the investors reeling in uncertainty, unsure of the next industry that will be targeted by the Chinese government, and it has certainly unnerved the investors in China for many reasons. The first reason, the swift, sudden and intense restrictions as we saw in the case of Ant, Tencent and Didi pose a huge challenge to these corporates. These restrictions are not within the rules of an open and fair market, and the profitability of these companies will suffer, and so will their investors. Their promoters have already suffered in a big way. The second reason why investors get unnerved is that the private equity and venture funds are already avoiding sensitive sectors in China where government intervention can play havoc, and are scouting for sectors that do not see a sudden policy change. Investments are shifting to manufacturing sectors like chips, automation and renewable energy. They are moving away from data-heavy and consumer-facing internet companies where they have already lost billions of dollars due to the government crackdown. And the companies that we are referring to again are Ant, Tencent and Didi. Due to the increasing regulation, there are fewer sectors now where Chinese investments are considered to be safe. Their valuations have shot up because of that, and thus the return on investments in these sectors where investments are considered to be safe have gone down for the investors. The next reason why investors get unnerved is the sudden and radical policy changes have resulted in massive erosion of wealth. Investors have been caught off guard, and regulatory risks have shot up in China with no guarantee that such heavy and sudden crackdown on businesses will not be repeated. In communist China, radical measures to remove wealth and income inequality do not necessarily fall within the contours of fairness or abide by the rule of law, and thus the entire investment in a particular sector or in a particular company of the entrepreneurs can be at risk with no respite or no compensation coming to them from any part of governance. The crackdown on the likes of Didi, which was listed in New York, also raised a big question mark about the very future engagement of Chinese companies with overseas investments and capital markets. Because due to such arbitrary and illegal decisions of the government, shareholder wealth can evaporate instantly. Chinese corporates were increasingly going to the capital markets of America to raise funds, and that is going to slow down in a big way. The next, if a company like Ant is seen as threatening the stability of China's financial system, online education companies are alleged to be feeding social anxiety in China, and online games of Tencent are considered to be an opium for the mind, then it means that there is a lurking fear of huge social unrest in China, and the ruling party considers a grip on the country to be fragile. It is for this reason that what we call the opium of promises and populism of socialism and moderate wealth for all is being given by the Communist Party of China in order to retain its hold on the nation. China thus now seeks to rebalance its political economy to move from an economy focused on exports, which it has been for the past many decades, to one focused on domestic consumption. That paradigm shift does not bode well for investors. Investors made huge monies out of companies which had grown big in exports in China, and probably those sectors are not going to take off any further. Companies which are inward looking into the domestic economy is where the focus probably lies. It has now been for the past few years that multinational corporates have been looking out for alternates to China to set up their manufacturing bases under their China plus one policy. It all started with a bitter trade war between America and China. It then got aggravated by China's frictionful diplomacy of lone wolf diplomats, as they are called, and it will now increase further due to this impending crackdown on capitalism and the political compulsion to redistribute wealth in China. China's radical crackdowns, sudden policy shifts, sudden pursuit of common prosperity, its preference for socialism over capitalism, and the huge losses suffered by investors because of these sudden shifts in policies mean that there will be a flight of investment from there to safer, stable, and better destinations where the rule of law prevails, unlike in the case of China, which is actually a nation without any constitution. The rule of law there is what the Communist Party of China decides and not even what the government decides. And that provides yet another opportunity for India to grab the investments going out of China or not willing to go into China and build its own economy. According to us, the earlier opportunities bypassed us and they went to the likes of Vietnam, Thailand, Bangladesh, Indonesia, Mexico, etc. But then, with the unique strength of India's democracy and demography, we must not miss this opportunity to attract investments again. India needs investments. India needs technology. India needs global markets in order to expand its own economy. And no better a time than now when China wants to shun capitalism and embark upon socialism for very populist and political reasons. This is Akhilesh Bhargava signing off till we meet again. Namaskar.